Hi, hello everyone. So welcome back to Stock Markets for Everyone sessions. So today we shall discuss about some of the basic topics. So far, what we have discussed was we understood about Nifty mainly, and also we understood what is a share and what is a market cap, right? So now what we shall go into more some of the other concepts that we require. Okay. So there is something called as trading which happens on the and that is the only reason why the prices keep changing of a particular stock. So whenever I say stock, now it means of a company's share, how the price changes. So everything, whatever we track, it will always be of single shares price, because with that you can know the other things like how the company is performing. It was all just a reflection of the single share. So whatever you see everywhere will be on basis of share. Okay. So therefore, the things that are traded are shares. So first we'll discuss about what is trading and how does the trading work internally, and we'll also look at what do you actually need if you want to start trading in the markets. So I'll be focusing only on the equity markets, that is the stock market itself. Okay. So we are not going to go into anything else like commodity and stuff. It will be based only on the stocks. Okay. So let's, without wasting time, let's begin the stuff. So first of all, what is trade? So you might have heard. So what is just a trade? So trade is nothing but anything where you have certain exchange of a particular good or service, or in our case, it is the stock, which is exchanged between two persons. Correct? So whenever there is an exchange, when an A and B have an exchange which is agreed at a certain price, that is nothing but called as a trade. Correct? So that's simply what is trade. So let's say, so you are having a trade between you and your shopkeeper. So the trade is for a, let's say a particular good, maybe a tomato. Okay, and you are agreeing that I will give you a tomato, you have to pay me some 5 rupees. So this whole thing, this agreement, this whole thing is called a particular trade, where the mutually the two parties agreed on a certain thing. So I pay you 5 rupees, I give you tomato. So this is the agreement. So that's the similar thing happens even here. So I say that person A says that I want to buy this stock at this particular price, say let's say 5 rupees. And if there is a person B who wants to sell the stock, okay, I'll be selling you. If so, it's the same thing. So he person A wants stock. So tomato here is the stock, and person B is willing to give, and for that he is willing to give 5 rupees. And if B says, uh, yeah, I'll take the 5 rupees to give you the stock, then the trade happens. It's as simple as that. Okay. So that's it. So that's how, that is what is meant by trading. Now, how does this trading of stocks work? Because this has to take place in a regulated way. So that is where uh, something called exchange comes in. As we have been discussing a thing called National Stock Exchange. So its work, this National Stock Exchange, basically the way it can treat it as a place or a warehouse where all the people can buy and sell stocks there. So that's a kind of an exchange. So it's because why it's called an exchange, where people are exchanging stocks from one to other. It's as simple as that. I'll give you. So I have this stock now. I want to sell it off to you. So, but what do you give me in return is some money. Simple. So, and which is agreed upon by both parties. That's it. Okay. So that's how the exchange thing works. So that is exchange. Okay. It is a warehouse where people buy and sell stocks. Then how does the thing happen internally? In a simple way for you to require to understand is there is a person, So let's say he's there is a person called some Bob, and here there is Alice, so whatever. Okay, so now this person, and there will be the, so previously there used to be brokers, correct? Even now there are brokers, but it has become online, correct? So now what happens is, this person Bob wants to buy a stock, and this person wants to sell a stock. Now I have to somehow match this order with this order, correct? So that usually the one who has that particular what do you say, I mean ability to do that or license to do that is the broker. So brokers are the ones who have license to place the buy and sell orders through the exchange directly. That is through this place where you can buy and sell stocks. So they are the ones who can do. All what you can do as a retailer or as a person who, let's say you want to buy a stock, you can only place a request for that. So what happens is you place a buy request. Now let's say this is a person, and this person places a buy request. So now the request will go to the broker. In our case, the broker is an online thing. So maybe a computer will be standing, which processes it. So now this computer, on behalf of your request, places this buy order, because this broker legally has the right to place the order. Okay, so therefore this will place your buy order. So now you have placed a request, the request will go, and this will all happen very quickly, so seamlessly, that you think as if you have placed the order here, but actually there is a broker who is placing the order on your behalf. You have just placed the request for that. So you have replaced this request. Now the network's work is to match it with a corresponding sell order, if at all it's present. Let's say he wants to buy at 5 rupees, then then this network needs to find some other request on the sell side, where who is willing to sell a stock to this person Bob for 5 rupees. Then these two will be matched, and immediately the order gets executed, and by which this person Bob gets the stock allocated to him, and thereby this person will get the money into his account. So this is how the overall process, whenever this happens at every single trade. So of course multiple trades keep happening, there will be multiple persons who keep um, asking for the requests, and there will be multiple persons placing the sell requests as well. So all, and this has to happen in the real time where the matching has to happen. And of course the price of the share or the stock keeps varying in by time, and there is a whole concept of how this price of the stock keeps changing and why does it change. That will not go into in this video, that we'll see in a separate video. But now what you need to understand is, so what are you doing actually, and how does actually the thing happens. So whenever there is an error and you say that your order is not getting processed, that means that the broker is not able to handle, or there is something wrong in the exchange where which is providing the people buy and sell stocks. Okay, if there the something is down, then that could lead to a serious problem, because now it's a online broker who is doing it. And for doing all this, the brokers charge something called as a commission. So, and also the exchange also charges something called the transaction fee. Okay, so all these are because they have to handle all your orders. So this is the cost that is incurred while this trade is happening. Okay, so that is how it works. Okay, now that you know how the trading works, now what if I have to do trading, what I did that I need to do in order to start trading in markets, where that means I just want to buy stocks and sell stocks. Then what do I need to do? I want to get a stake in a company. Then what do I need to do? So what are the things required to start trading in equity markets? Okay, simple. So all the things you require is first thing you require is something called as a demat account. Okay. So in order to get this, you can go with, I mean, there are many brokers who provide this. So first thing you need to have a bank account open, and you need to have a PAN number. So this is a must. So you need to have a PAN number and you need to have money. That's it. So this is all you need to start trading in equity markets. And I mean there may be some age limit as well, which you can refer if at all there is any. But otherwise, the most important things you require, because when you get a PAN number to yourself, I mean that automatically takes care of the age, so that should not be a problem. So main things is the bank account, PAN number, and of course money is required to trade. So that's the thing. So that's all you require. So once you start opening a demat account through any of the services, so there are several things like I mean almost every bank has its own demat account. So let's say Axis has its own demat account and stuff like that. Apart from that, so demat account is basically used to hold the shares. So whenever you want to hold the stocks, so this is like a container which is used to hold your stocks. So it's like simply like how a container where you can store your fruits. Similarly, you can hold the shares in this account. This is your container which will have a demat account ID, which can be shared across multiple brokers. Okay. Um, so that's how it happens. So now there will be a broker. Each bank has its own broking services, and similarly there are other individual services like Zerodha, and there are Upstocks is one another service. There are several things which they offer. So that's it. So these are the things you require. Once you have this, you can just register at any of the sites, and the process will go on, and you'll be able to do it. So that's it. Then coming to, let's before ending this session, just let's discuss about a small aspect of. So you keep hearing about something called growth and a dividend in any of the things, like wherever you see in the mutual funds. We'll see about what is mutual fund and all later, but just to give an idea on stocks and everywhere, there is these are two very important concepts. So simply put, whenever a company, whenever a company earns profit, it can do two things. One thing is it can just give that profit away to the ones who are holding the shares of the company. It can just share the profit depending on the number of shares you hold. Correct. So when a company does that, that is called as dividend. Okay. So those are called income stocks. So this dividend stocks are also called as income stocks. So where you keep getting constant income, which they keep sharing mostly on a quarterly basis. Okay, quarter is nothing but every financial year will be divided into 4 quarters, of which occurs after every 3 months is a quarter. Okay, so that's how you get it. And growth stocks are those where the stock is basically the company wants to grow more. So therefore, the profits it is reinvesting either in its employees, or maybe in the research projects or some other new projects that it wants to, or it wants to buy some assets. Assets means like buying a land or anything which is required for the future prospects according to the company, which may or may not turn out to be good. That's a different story. But when it does that, then we say that that is a growth stock where you don't get regular income, but rather the expectation is that the company could do far better than this. And so at least the company believes that is the case, and hence it is expected that you get a more profits, whereas here you keep getting a constant income. Okay, so these are the two. So whenever you see a scheme where it says a dividend scheme in incomes, or it's also called mostly income. Okay, dividend or income stocks. So this means income means everything you get keep getting constantly, right, at every regular intervals. So whenever you see that, that means that basically the profits are being distributed away directly. Whereas here, the profits are not distributed, whereas they are reinvested in the growth of the business. So that's about it. So that should be enough for today. So main takeaways today is what is the trading? So trade is nothing but there are two parties who actually agree at a particular price for exchange of a particular product, and in this case, it is the stock. Okay. So and how does it work internally? There are two people. You are only placing a request and you are not actually placing the buy order, and only the broker, that is the online one, through the help of the network, which is an exchange which facilitates the buying and selling of stocks, processes your order and tries to match it with another equivalent sell order so that a trade can happen. Correct. And apart from that, what else, what all you need to start performing this trading in equity markets, where you can start placing your requests? You need a demat account, a bank account, a PAN number, and some money. And you can start from as low as 500 rupees or anything like it. There's no limit to the amount of money you require. So but you should have some money. And then coming to the last thing we discussed was growth versus dividend stocks. Dividend stocks or incomes are also called as income stocks, where income stocks are ones where the profits earned are distributed to the shareholders, whereas the growth stocks are those where the profits earned are reinvested for the growth of the business for which is anticipated. So that's about today. Hope you enjoyed this. So we are also introducing something called a quiz to actually make your understanding strengthen, and you can actually understand whether you have actually understood the thing or not. Okay. So that quiz will be posted right in the comment section and in the description section as well. I'll pin it. So you also, there is a quiz posted for the previous videos as well, which you can try to attempt it. I would definitely want you to attempt it, because that would help you to cement your understanding of whatever you have learned in that particular video. Okay. So please hit the like button and subscribe to the channel if, and please post any other questions that you have. Bye bye.